today we're going to be doing a video here about Alibaba. And Alibaba is a Chinese company, so there is a lot of, people who are fearful of investing in them due to China politics. But as you can see, their numbers are a fucking beast of a company. Check this out. So from 2014, we're at 3 billion. 2023, we're at 29 billion for free cash flow. We are going to use numbers since 2014 until 2023 from our calculations, but we're also going to show you if we delete those to show something that gives an average that's more comparable to where they're actually using their free cash flow over like the last 6 years. So, as we come over here, we can come up to their revenue. And as their revenues, you can see 1.21% decline over the last 12 months. But their most recent quarter was a 5% increase. If you go down to their revenue, though, look at 2014 all the way to 2023. That's a lot of growth in the last 10 years. And they're projected to grow at 4% over the next decade. So if you come to their EPS, as you can see right here, their numbers have grown a lot too. They're continuously going up. 2023, I would say that 2021 is an outlier, so is 2020, but that makes sense during the COVID years. So they're starting to get back to normal. But they're doing really good. As you can see, the last 12 months, 7.13 as a 675% increase. But, you know, it declined a lot over the last recent quarter. So, we're not really looking at EPS. We are seeing that their revenue is growing. They're doing a good job. They're buying back shares. They just bought back a lot of shares. Look, 3% decline year over year. And it's at 2566 now for their outstanding shares. As you can see, they've been buying back the last couple of years because they've been undervalued, definitely, with these financials that they're showing. Their total assets is up to 248,299. Excuse me. Cash on hand is up 13% to 83 billion. Excuse me again. Long-term debt has increased, but it's only at 21 billion, and their total liabilities has declined. It's at 89 billion. So, they're doing really good with their financials when you look at it. If you go deeper into it, I mean, of course, you can always come into their financials and you can look at the income, balance sheet, cash flow, and look more into this. But we're just here to give you guys a calculation and why BABA has recently joined my portfolio when it's hitting lows. So as you can see here, we're entering the numbers from 2014 until 2023 with a 4% growth rate, 2% perpetuity, a 10% discount rate, the outstanding shares. We come to a discounted cash flow price of $99, 20% discount rate, $79.20, which is still under the current trading value. It's currently trading a little bit over $76 right now. And if we erase 2014, 2015, 2016 to just give ourselves, something that's a little more accurate, you could even get rid of 2017. This brings our average free cash flow, as you can see here, right around to that 22 billion mark. So, with the outstanding shares, we have $126.97 Give ourselves a 20% discount rate at 101.58, which is still under our current trading value for BABA, which is actually insane. Because if you come over here, we'll just steal this real quick because I'm being lazy, and we'll put it into here for you guys, just so you guys can see. Paste, and then we put in BABA 76.59, and that's 101.58 with a 20% discount. If they're going to continue to have free cash flow, right around this mark and higher going forward, as you can see, going here into this range. So, they're extremely undervalued right now in my eyes, and I currently added them to my portfolio. Please let me know what you think about BABA, and if you're going to add them to your portfolio anytime soon. Always do your own financial research, but this is what I'm coming up for with BABA. Even if we use a 12% discount rate here, if you want to grow 12% per year for our money, it's coming to $100.64 with a 20% discount rate. It's still under what it's currently trading at right now. So I think, the risk with BABA to the reward is really good right now. Thank you.